Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. We're going to dive right in, take a look, see what's going on today. If you want to follow me, it's at _finance. And if you want to join our community, finding-value.com, I dive deeper into all these topics and subjects, looking for investment opportunities and sharing all those opportunities with everybody in the community. I answer your questions on the weekend through question and answer sessions through a Zoom call. Our next session is Sunday at 5 p.m. I also release midweek updates for things that I think look good. I go over a lot of the companies that we own and give updates on those companies. If that sounds interesting to you, check out the special coupon code in the corner there. Special, 50% off the first month only on the monthly membership, and a larger discount on the yearly membership. You can always switch from a monthly to a yearly. So Tavi says silver miners are leading today and beginning to outperform the metal itself. Skeptics are quick to point out the downside leverage in mining stocks, but they're now being reminded that the same leverage works powerfully on the upside too. As I've said before, this feels like the very early innings of a golden age for mining. Game on. So silver junior miners, which is SIL-J divided by silver ratio. And I think he responded to me because I posted this not too long ago, just before him, breaking to the upside. So Warren Buffett says, risk is not knowing what you are doing. Risk is not knowing what you are doing. Now, if you're following all of these ratios, if you're following all of these technical patterns, let's say in the silver junior mining space, if you know what you're doing, you're buying patterns, you're not chasing price. This is a breakout. So, what we're doing is we are reducing our risk by where we are buying these companies. When you buy something that is down here and now breaking out, granted we were buying it before that, uh, we are putting that powerful surge, the power of these junior silver mining companies, we are focusing that power to the upside, and we're handling our risk by buying it when it's really low. So that's how you're harnessing the power. What people generally do is they just chase price. And I said something about that yesterday about, well, Calvin did, I should say. Calvin said 99% of people are just morons running around chasing momentum. Um, well, that's what risk is. They are moronic for chasing price. And what we're doing is we're chasing value, we're chasing a pattern, we're chasing things that are down. And we're going to harness that upside power, that asymmetric big upside potential, small downside risk. That's what we are harnessing. And in the ratios, it's a little bit more pronounced because, I mean, if you were to do a bell curve on this ratio, we are literally buying it at the tip of where this barely, in terms of length and duration, barely hits the edge of the undervaluation right out on the three, maybe it's a 2 or 3 standard deviation tip. And then we ride it all the way up to the upside, maybe 3 standard deviation tip way up there. Hopefully it gets all the way up there for the full valuation ride. Another one, the war on oil, daily ramp up of NASDAQ have the same objective: to hide the true weakness of US finances, the economy. Well, I'll give you my opinions here, all right? The economy and inflation are linked together. As the economy roars, generally you'll see inflation tick up. So if Powell is going to slow down inflation, what do you think he has to do? He has to slow down the economy. He has to increase unemployment. He needs to slow things down. And when you raise interest rates and you hold interest rates up for a while, what you're doing is you're trying to slow things down. So if you've got a bunch of fiscal spending and you've got problems with your interest expense, where the interest expense keeps plowing money back into the world, your economy is going to want to grow. So you're in a difficult position because you got to raise rates to kind of slow everything down. You need to slow down the economy, slow down bank lending, slow down the housing market, slow down here, slow down there. But he's got to thread the needle on the slowdown while slowing down inflation and all that stuff while trying to not get into a recession. Now, this is what I think they're doing. Take it for what it's worth. I think that they have put us into a slowdown recession and they're just fudging the numbers. They're fudging the numbers because there's probably too much inflation coming into the economy, and that's what we're seeing with go to the food store or grocery store, go buy some food. Yeah, it's pretty obvious that things are going up, and they're not coming back down. I don't think we had a little bit maybe in certain areas that came down a teeny bit, but beef, I mean, that's got to have a breakout. I mean, I don't watch the beef chart necessarily. I could, but that definitely looks like it's breaking out from what I buy and what I see. So what I think he's trying to do is I think they're just trying to cover it up, and slow the economy down at the same time, but have it be inflationary. So they lie about inflation, they overstate GDP through the understating of inflation, and that's where we're at. That's exactly the situation we're in, I think. Here's JC Parrots. It says margin debt is hitting new all-time highs. One thing I love about total margin debt is how much the perma bears like to use it to try to convince you that this is somehow bad for stocks. So we've got a basing pattern. We've got a nice little cup and handle breakout. We have another cup and handle breakout. And there is the margin debt surpasses 1 trillion for the first time. So there's the green breakout. We've got a projected move of 1.26 trillion from where the breakout is. Your size of the cup is the size of the breakout on top of the handle. So that's roughly where we could be going. And with that type of margin debt leveraging up, that could drive markets higher. Very well could. Giovanni says the oil market is pulling all the levers it can to ease a global diesel crunch, but the window is narrowing to replenish stockpiles of the world's workhorse fuel before hurricanes and refinery maintenance curtail output. From the U.S. Gulf Coast to Rotterdam and Singapore, storage tanks have only recently started rising from dramatically low levels, and traders say it's going to be a tight race to refuel them. Does that seem like we've got a problem with oil prices? That seems like we have a problem where we don't have enough. And that's diesel. That's diesel. So diesel is made from heavier oils, kind of the mid-grade and up heavy oils. So, I mean, that's what's going on there. Things are getting tight. President Trump is set to sign an executive order as soon as today allowing crypto investments in 401k retirement plans, per a White House official. Man, they are pushing crypto hard. You know why? We have so much money in the system that I think they're trying to soak it up with these intangible assets. They want you to be there. I don't want to be there. I want to be out. I want to be out of there. Give me the physical. Give me the crap that actually matters. I don't want digital zeros and ones in hexadecimal format. I don't need that crap. And you know what else? They want you in the digital intangible world because you can't get out of it. How do you get out of it? What if they shut down Coinbase? What if they shut down all the off ramps, on and off ramps of getting out of it? How do you unwind that trade very easily? You can't. You're stuck in your stupid little wallet offline. And then what's going to happen if you can't transact on it? Oh, look at there's a transaction. Well, that's apparent because you can see it on the blockchain. Everything is tracked. That's absolutely horrible. Horrible. They can control you to the nth degree. Ugh. Yuck. Okay, Patrick says, okay, let me make this crystal clear. Whatever silver does right now, going up to 40 or even $50 an ounce, it will pale in comparison to what will be done once it breaks out versus the stock market. The rocket ship moves aren't happening now, they happen later. Guys, if this isn't rocket ship moves, I'm okay with that. Like, I've been riding this for a while. And it's not about being late or not. It's about getting in cheap and just riding this whole thing up. Yeah, do I think silver could go to $300 an ounce? Yeah, I think it could. So why wouldn't I buy it now? So yeah, I don't want to be late. I want to be early. I want to be at the party first, enjoying all of the drinks that are still available that no one else can have right now because I'm here before they are. I don't want to come in late having to walk over some nasty, throw up or something if people are drinking too much and the bar is completely gone, ransacked. I want to have my choice. I want to be able to leave when I want to leave, and I'd like to be way up before everyone else because it's good getting that early entry point. It also, with a lower cost basis, gives you a little bit more uh, asymmetry to the trade, which is good. Investment wisdom, it says, knowing what you don't know is much more useful in life and business than being brilliant. So, knowing what you don't know. There's a lot of things that I would disagree with some of my managers. I'm just bringing this up, and it's a little bit of a sidetrack. They would always say, "Hey, Andy, you're really, really good in these three or four different areas, but there's this one area over here that maybe I'm not as good at." And I would say, yeah, that's fine. I don't like that area. I don't want to get good at that area. You can get incredibly good in a few things, be incredibly good at it, and that's all you need to do. If you like that area, which I did, I liked certain parts of the job and I hated other portions of the job. I focused on the things I really liked and I tried to avoid some of the things that I didn't like. Uh, Other people would say, well, you should get better at the things you're not very good at. It's like I completely and utterly disagree with that. That's like saying, let's say I'm really focused on baseball. I like baseball, and I want to progress me being really good at baseball. But let's just say I absolutely am horrible at swimming, and someone says, you know what? I think you should become a better swimmer because you'll be a more well-rounded athlete. And I'm like, no, I want to make it in baseball. And I could play other sports and get better at baseball too. Like hockey or other sports that makes me a little bit more athletic. But it doesn't mean I have to go after the thing that I really really hate, which could be, let's just use swimming for an example. So that's kind of what they were doing. There's like, hey, look at this. When I'd rather be doing that. So when it applies to this, knowing what you don't know or knowing what you're bad at and avoiding it is much more useful in life than in business than being brilliant. Another one from Tavi. It's there goes the largest silver mining company in North America, which is Hecla Mining. Major breakout likely in the making as well, in my view. Silver miners are starting to move from what continues to be historically undervalued levels. Meanwhile, silver prices are also again approaching $40 an ounce and likely to retest its prior highs, in my opinion. So there's the breakout in Hecla. In fact, we were talking about Hecla the past, I'd say, month over here, saying, hey, look, if we get a breakout here, we could see a very big move. Now, a lot of the times you might get a breakout on a retest. It's a possibility. It doesn't mean that you will 100% get it. It does it a lot of the time, but it doesn't mean you will 100% get it. So this is starting to break out. I think you're going to see a very big move in Hecla. GDXJ versus gold. Junior gold miners versus gold. Downtrend broken and the head and shoulders bottom has been confirmed. So there it is breaking out right now. So all of these are starting to break out. So what do you think I'm going to do? No, I've already purchased it. I did not. I'm not buying. I'm already in all this. I've been riding this for a year or two or three. What I've been doing is I've been searching across all these different sectors, gold, silver, the bigger companies, the smaller companies. I like the smaller companies personally. And I've just been picking bottoms left and right, picking bottoms, buying within, as close as I can get. Now, have I been successful on every single pick? No, no, I haven't. There's been ones in energy service that I haven't bought the exact bottom. I've had to ride down 40, 50% or more before they bottomed. And that was already after a 60, 70% pullback on the stock. But a lot of them I've done incredibly well. I've gotten real close to bottoms on some of the silver junior companies and gold junior companies. Uh, Off those bottoms, some of them are up 100, 200, 300%, depending on where you purchased them exactly. And I think we've got a long way to go ahead of us. I think if we were to go back all the way up here, I don't know if people understand what that could do for their portfolio. I really don't know if they understand. A lot of people want to pull the trigger. They want to sell. They want to get out. Get me out of here. I'm kind of like, no, 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 time out, guys. Like, if you're good and you are comfortable holding, I would be holding here. If you purchase, the bottom here and you're up 300%, which we have a couple that are like that. Actually, now there's probably about 5 to 10 of them that are well over 100% increases. Even some of the producers that we bought about a year ago, or a little bit more than a year ago. These are all starting to come out of their bases. The producers are a little bit more along their way. And we have a couple that are squeezed into corners right here, right now. Some of the other ones are just starting to break out of this little downtrend for developers. So we still have opportunity to buy when they're cheap, but that window is closing and it's closing fast. As these start to take off, which they are, that window closes because your asymmetry changes if you buy it when it's up here versus buying it way down here. You get a different risk reward profile. Bubble trouble. 24, 25, number one in overvaluation across the board. That's combined trailing PE, forward PE, CAPE, price to book, enterprise value to EBITDA, the Q ratio, market cap to GDP. Now look at these right here. All right. This one here was 1931 when they did the gold revaluation, commodity bull market. 66 was right before commodity bull market. 99, beginning of commodity bull market. And look at where we're at in this circle there. Commodity bull market. So you want to buy the S&P down here. You want to buy the S&P down here. You want to buy the S&P down here. You don't want to be buying it up here. You want to buy commodities. That is the ratio. The ratio is the inverse of this being expensive for commodities. So commodities are cheap when this is all overvalued. Guys, there's going to be a lot of people that get their nuts cut off here because they're going to go buy NVIDIA and chase price. Grady, another one. GDXJ broke out on daily time frame yesterday. It is lagging GDX and should play catch up. Posted on the 3 breakouts above, blue and purple and black lines. Then it backtested the black line. It means the last big resistance is now cleared. I hope you have taken notice and made big profits from my posts up from the very lows. Most will miss most of the bull market as usual, though. So for heaven's sake, Take notice now if you have not before and get proper guidance for the bull. There's GDXJ ripping higher. There's a guy at work. He may be listening to this. Good job if you're still holding, which I think he is. I think you bought right at the bottom here. Right when this pullback came, I said, hey, look, GDXJ and some of the gold and silver mining companies look pretty good. And I think you put a whole bunch of money right at this bottom there. And now he's ripping higher. This is a long way to go. So hold on, big man, hold on. It's going to have a heck of a return here if you can hold through all this. So it's a massive rounded bottom, arc cup in the making, now climbing on the right side. Expecting a reverse symmetry move back up to the all-time highs. Looking good, looking good. Here's Jorge. Between April and June, they pledged to increase output by 960,000 barrels a day, a net 730,000 barrels a day, including required cuts. Yet OPEC data shows they achieved an increase of only 540,000 barrels per day. The production data opens new tab also shows Saudi Arabia accounted for more than 70% of the net increase. So although they are talking about big numbers that could potentially increase, the actual output is not as big as what the increases were expected. So keep that in mind that we're not increasing exports is what most people think. We don't get paid for activity, just for being right, says Warren Buffett. I like that. I like that so much. I want to hug it. Yeah, I want to hug it. People at my old job, all they looked for was activity. Freaking hated it. They didn't look for being right. They didn't look for the value that was created. They just looked at activity, movement. Like, oh my God, I hate that. I hate that. Sorry, guys. I just absolutely despise that. Saudi's oil policies on full display. For the people who are aware, this is almost too obvious. Saudi crude exports. Wait, it went down. What's going on here? They didn't go up. So what's happening? I thought we were supposed to get all this more exportable oil to the market here. I don't know if it's coming, guys. We'll see. I said ready for the boom. Silver and SILJ. So SILJ divided by silver, you can see the clear breakout now. Looking fantastic for this bottom here. I've got one trend line that's been broken. And then you've got SILJ. And again, I've said this before. This is a launching pad. We're going to launch out of this pad here. We're coming out of it right now. And then we'll launch through it. We might get a little bit of resistance right where we're at. We'll see how long it takes for us to kind of get through all that. But this is going to be a launch pad. I hope you're ready. I hope you guys are ready. Here's GDXJ, put in a false breakout to the downside, then turned around and broke back inside the blue symmetrical triangle. And yesterday it broke out to the upside. That's very clear and very stylish chart. False breakdown. You know who sells these? All those technical analysis guys. They'll say, oh, it's broken down, let's get short, and then it squeezes them all to the upside. That's the slingshot. That is what the slingshot is. It's a false breakdown to the downside. Gets everybody bearish who can only read charts and they're not aware of the cycle. If you're aware of the cycle, you get in here and you buy it, and then you just let it rip. That's the slingshot. Slingshot cheetah. Freight futures AM update. Dry bulk, Capesize up 1%. Panamax down 2%. Tankers are flat, both of them, VLCC and Suezmax. And that's all I've got for today. So we'll end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Specials the coupon code if you'd like to join. And that's all I've got. So we'll catch you next time. This is Finding Value.